Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 2nd, 2025, and we're diving into the Cigna Group's first quarter earnings report for 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss the Cigna Group's performance, especially given their strong results this quarter.
Revenue and profitability overview. Let's start with the top line. The Cigna Group reported total revenues of $65.5 billion for the first quarter of 2025, marking a 14% increase year over year. John, what are the key drivers behind this impressive growth?
The revenue growth is primarily driven by the expansion of existing client relationships and robust growth in their specialty pharmacy segment under Evernorth Health Services. This segment alone saw a significant increase in adjusted revenues, reflecting strong specialty volume growth.
And how does this translate into profitability?
The Cigna Group reported an adjusted EPS of $6.74, which beats the analyst forecast of $6.39. This is a testament to their effective cost management and strategic investments, despite a slight decrease in adjusted income from operations compared to the previous year.
Operational efficiencies and future outlook. Operational efficiency seems to be a focus for the Cigna Group. Can you elaborate on their SG&A expense ratio and share repurchase activities?
Absolutely. The SG&A expense ratio improved to 5.8% from 6.4% last year, indicating better cost control and a favorable business mix shift. Additionally, they've been active in share repurchases, buying back 8.2 million shares for approximately $2.6 billion, which is a strategic move to enhance shareholder value.
Looking ahead, what does their outlook for 2025 suggest?
The Cigna Group has raised their full-year EPS outlook to at least $29.60, reflecting confidence in their growth platforms, particularly Evernorth Health Services and Cigna Healthcare. CEO David Cordani emphasized their commitment to building a sustainable healthcare model, which bodes well for future performance.
Segment performance and strategic initiatives. John, let's delve into the segment performance. How did Evernorth Health Services and Cigna Healthcare fare this quarter?
Evernorth Health Services reported a 16% increase in adjusted revenues, driven by growth in pharmacy benefit services and specialty and care services. Cigna Healthcare saw a 9% increase in adjusted revenues, primarily due to premium rate hikes to cover rising medical costs.
What about their strategic initiatives, particularly the HCSC transaction?
The completion of the HCSC transaction, which involved divesting their Medicare businesses, is a strategic move to streamline operations and focus on core growth areas. This transaction impacted their customer base, but aligns with their long-term strategic goals.
Key takeaways. In summary, the Cigna Group has delivered a strong performance in the first quarter of 2025, with significant revenue growth and a positive earnings outlook. Their strategic focus on operational efficiencies and growth platforms is clearly paying off. John, any final thoughts on their investment prospects?
The Cigna Group's robust financial health and strategic initiatives make it a compelling investment, especially with their raised earnings outlook and active share repurchase program. Investors should keep an eye on their continued execution of strategic goals.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on the Cigna Group's performance in the comments below.